Yeah, so around 0.68, I don't know exactly what it is, around 0.68, 0.67% on the NAS. We did take a couple of losses prior to that. That was in the Dow Jones and the NAS. So we wiped out the losses that we took from those two and then added a little bit. The weekly return so far is up 0.17%. Alright then guys, good evening to you, Braden, as well. Good to see you, mates. Nice turnout today, so let's get rocking and rolling and see what we've got going on this afternoon. So yesterday was a bit of a jumble, wasn't it? We did end up getting a really nice position in the NAS 100, and that was great. We had to wait very patiently for it, but we did end up getting the target, and it did achieve, so that was really nice. And it was, I believe, a net return. Let me just pull up MT5 quickly. Yeah. So yeah, I think we got a net return something like 0. I don't know what it was, 0.68 or something. Just bear with a moment. Yeah, so around 0.68, I don't know exactly what it is, around 0.68, 0.67% on the NAS. We did take a couple of losses prior to that. That was in the Dow Jones and the NAS. So we wiped out the losses that we took from those two and then added a little bit. The weekly return so far is up 0.17%. So that's pretty slow. It's been a very, very slow week, though. We're all well aware. We've all had our eyes wide open to what's been going on this week and the lack of the momentum. But we have had some pretty sizable moves. To note, yesterday's stocks actually did sell off quite significantly. We had the big spike up and down in the Dow Jones. As you guys recall, we were looking at this one live. And then the NAS 100, we got this big sell-off, as well as the S&P 500, which also got a really nice big sell-off there as well. But on top of that, we had an incredibly dovish RBNZ event. Now, it came as quite a surprise, and honestly, I suppose it's not a surprise to. I suppose it was a surprise to everyone around the world in the markets, because we got some really sizable moves in the Kiwi. So the Aussie NZD jumped from down here at around 109.50 all the way up to the highs at 110.64. And we also had the NZD USD down here, which was a huge move from 58.88 down to the lows where it's been sort of consolidating at the moment at 58.37. These are some pretty old school sized moves from the sort of macro theme there. So really interesting. But yeah, they've cut rates. And they are not done cutting rates. We are looking at the continuation of rate cuts taking place in New Zealand. So we probably will expect the trend to continue trading lower with news like that. Now, if we look at the daily timeframes and where we are at the moment, so for example, we are trading here on the daily right now. And if we look at the Aussie NZD, we're trading, I mean, this is such a ridiculously sized candle, isn't it? You know, we're going right up to the highs there. But make no mistake, that high was not just by chance, because that's come into liquidity on the daily time frame as well. So I'm thinking about trading some knee-jerk reactions away from the big points of liquidity on both of these trading assets. Not taking it all the way back down to 109.52, for example, where the move started, but we've broken through some pretty nice intraday liquidity points. We've got one there at around 110. We've also got the one down in the NZD USD. That one's up, arguably, I would say, at around 58.75, possibly 58.80. I'm thinking, I mean, look, this is going to be the breaker structure for it. It has to be, because that's the beginning of the inflection. That's actually a sizable move away from where we're trading at the moment. So we might actually be able to take the trade from, say, here in the next couple of minutes up to there as a small intraday idea for that corrective. We'll check that one out though in a moment. I want to start off from the top. So Aussie NZD, the breaker structure for this one from an intraday perspective is going to be, I would say, about here. Now we've got a really nice series of lows. We've got the market sort of, coiling itself in between those 2 points in time at the moment. And it doesn't seem like it wants to push its way any higher. We did get a couple of higher highs being formed, but it didn't have that follow through. You have to think, when the market has a massive, massive move like this, you have billions of dollars being removed from the market all over the place. Commercial banks, commercial funds all over the place are going to be taking away that money and then reinvesting. So now, when we have a big move up to these areas of liquidity like this, that's why we can look at shorting them and sort of have that understanding around the markets to take the short as the profit taking's taking place, because that's when we can get some nice correctives on the way. Doesn't always work out, of course, but that's why we have the risk management in check. Now, the first thing I would like to do is this Aussie NZD short. I will be happy targeting 109.98, and I will be happy having a stop loss at around 110.38 there as well. And this is going to yield a 1 to 2.46 team, so that's not too bad at all. It's about a 12 pip stop. So that's going to be the first one. Now, this is based on a pending order. Okay, pending order, 0.25%, 0.25% risk on the trade. Net result probably going to be around 0.56, 0.57%. So that one is going to be downloaded. Now, I do want to just jump over to the Aussie CAD as well. Aussie CAD is here. This is a little bit frustrating, I must admit, from where we're trading at the moment. We came to within a hair's breadth of our short, but it is almost there, and I don't have any kind of fear or anything like that about the trade. It's looking really good. We've got a lot of points of interest above price at the moment. The path of least resistance is still very much to the downside, and this will just complete a really nice back-to-back series of trades here. We got that beautiful 1 to 2.76 a week before last, and then last week we took this short right the way back from liquidity again, and it's just nice playing this out in real time. So doing very well at the moment. Hopefully we won't be in this one for too much longer, maybe another few hours, I would say, and we'll see that 89.16 point be reached with a little bit of luck. So Aussie NZD short-term short. Let's go down to the NZD USD. We're going to buy this one back. We are doubling up on the risk doing this, but honestly, I think it is probably quite worth it. Yeah, I think it would be quite worth it, really. So we've had a bit of a stick above the breaker structure point, haven't we? And the market's actually contracted. I am not lacking in confidence for the market to come back up to 58.55. I'm really not. I'm pretty damn sure we're going to get up there sooner or later, and timing is everything. Timing is key with these setups. So what am I thinking? I'm thinking we use the high as the point on which price needs to break above, because we're going to be closing off in 3 minutes time, which means that's the new high. I think it would make perfect sense to have the order above that high, again, where we're going to be looking at targeting that 58.55, and then the stop loss for this one all the way up here at around 58.35. Now this is yielding a 1 to 2.16, but we do get a little bit of a nicer room to breathe with this trade idea. Now it's only, the net return is going to be a 0.52, 0.53. But it's very well rounded. It's a very sort of well balanced trade. Now I would not be surprised if in the next 24 hours, 24 to 48 hours, let's say, a little bit of a larger margin for error, if the NZD USD wasn't trading back upwards of 58.70. I do indeed think that's going to take place, but it's not worth going for. It's not worth always going for the big run, the big hitters. We want to be chipping away. Relatively decent risk-reward ratios, obviously, in comparison, but that's what we want to be doing. We want to be chipping away. So that's going to be the NZD USD, again, based on pending order, 0.25% risk. Now, with this one in particular team, because of where the market's trading at the moment, let's just have a quick look at this Yeah, not necessarily that one. I'm all right leaving that. But where the market's trading on this one at the moment, I'm actually going to punch the numbers in now. So that would be worth you guys doing as well if you want to follow suit. If you don't, absolutely fine. But if you do want to add this to your books, then I would probably suggest punching the numbers in on this one ASAP. So yeah, just bear with me for a moment on that one. Good afternoon, Cora Tim. Good to see you. Right, just give me a 2 secs, guys, and I will be punching these numbers in. We have it's such a common occurrence, of being able to, or being in the middle of a stream and getting lost in the translation of things, and then going back to update all my trades, and then finding 2 or 3 of them have triggered. So even though it is a little bit of a long-winded thing, it is necessary because at the end of the day, I need them in my account. Okay. Right. Okay, that's cool. Let's carry on. So we've got a long in the NZD USD. We have a short in the Aussie NZD. Now, I want to get some dollar. Let's have a look at dollar yen. That looks like a murder scene at the moment. Not really too much of interest going on there, is there? Daily looks bloody awful. So we'll give that one a pass. What about the USD Swiss? Let's get rid of this. Okay, so we've got some really nice structure over the highs there. Definitely some key inflection points. We can see that by the sizable moves away from this area. So that's pretty good. We also have the low down here. So we have a relatively short-term case of price equilibrium. I mean, if we look at the broader view, there's still price equilibrium going on here as well, but it's a little bit inconsistent. We have this low down here rallying up to this high, which are inconsistent in conjunction to the rest of what we see. But this, in between here, is actually quite nice. So possibly looking for the buyback opportunity once price action reaches liquidity down below. Yeah, I think that. Yeah, no, that's not too bad. Let's map it out. Let's see what the risk reward is. So breaker structure for this one. I want to be in quite early. Let's just go look left. If in doubt, look left. See where the key point is. So that's quite a nice key area in there, isn't it? It doesn't solve the lows that are coming into the market just down here, but I do want to definitely be in as low as I can because it means that we can have a lower stop loss and more protection to the trade. It's an offset. It's a real process of weighing up what looks best. So that's going to be our target. We know that's our target. We know that's where the money is. Proof is behind us. If I have the opportunity entry at 80.60, the stop loss for a 1 to 2 is going to be at 80.48. And I'm not overly keen on that. I wonder if there's anything else. Let's zoom in. Let's get a bit of a better idea of what's going on. So this area in here it must be highlighted. That looks really nice. Market's sitting on top of it for ages before we get the little poke through into the big money point down at 80.48. So let's take that and drag that one left. Okay, really nice. Market comes up. We have a really nice slow retest of it. Boom, knee-jerk reaction straight up to 80.78. So that's really nice proof of concept there as well. Let's go back even further. Okay, starting to build a bit of a picture now. It loses clarity at certain points in time, but I think for the yes, definitely look at that. That's the primary point of that knee-jerk reaction there as well. Really nice big point of inflection. So this is looking pretty good. It's not perfect, but perfect is a hard thing to find in price action. Interestingly enough, if we drag it forwards in time, it's the low of this big move before we have the bounce back as well. So now what I'm going to do is bring my entry down here, and then that's going to free up some margin to move my stop loss. So then I'm going to move my stop loss even lower. I'm going to have that at a 1 to 2.2. This is going to yield a net return of approximately 0.52. And that's going to be able to encapsulate the majority of the lows that we see down here. Not every single one of them, but the majority of them. So out of all of the moves that we've seen down into liquidity so far, there's only a couple of notable call-outs where they've broken through the bottom, sense being in this little bit of a range, if you like. So there's only really these two that we need to concern ourselves with. So that's not too bad. That looks like a really nice, well-rounded idea. So I'm just going to check the daily, make sure there's not any context I've missed. So the point down below is arguably this point in here on the daily time frame. So that makes perfect sense. The point above kind of doesn't really matter, to be honest, but it is an important level on the daily time frame itself anyway. I tell you what, team, that whole entire thing's looking pretty good. I'm happy with that. So I'm going to leave that one in there. That is going to be confirmed. So this is going to be based on a pending order at 0.25% risk. However, there is a stipulation. The market must reach the cash rich point down here at 80.44 before we lock in that order. So what you can do is set up a buy stop, and that will go up to there at 80 or 88. A lot of eights. But there you go. So that's the trade idea. So the market has to come down. We have to reach the buy point, hit liquidity. Once liquidity has been achieved, we then need to see the continuation away from there. That's when we get the breaker structure we want and the rally after. So that's going to be a green on the USD Swiss download. Okay, this is looking, I feel a lot better today. This is looking a lot better than I felt things were looking like yesterday in the heart of the Jackson Hole. So let's carry on. NZD CAD. We've already got the Aussie CAD. I've got Aussie NZD and the NZD USD, so I don't want to load up on another one. I have to say, though, it is quite enticing. That's one hell of a move, and I would imagine there to be quite a nice buyback as a result of it. Cable. Not too interested in this one at the moment. No, not from where it is at the moment. It would have been really nice at 3:30 in the morning, but not now. Just making sure there's no questions. Yeah, that's fine. So we've got pound against the yen. We haven't actually got any yen exposure at the moment, so this could be a goer. Let's have a look at this one. Let's jump up to the daily, get that top-down context. So daily time frame, we're looking at big points of liquidity up here, aren't we? Look at these sizable moves. Commercial interest is at play at around the 200 to 198 mark. A lot of commercial interest in the markets here. Absolutely. So the retest of this area has failed. We're now trading sub that 199.50 area. We have, what do we have? We have, this is where we get into the nitty-gritty detail of things. So let's go, I don't often do this. Let's have a look at the 4 hour quickly, because the daily's almost covering too much of the detail there. So really, I want to try and find, so if we remove that daily zone, we know that's a big one up above, right? What I really want to find is I want to find the true trading margin between this level and this one. That's where I want to be trading. That's where the magic happens. So now what I need to do is I need to build a trade in between where we're currently trading at 198.73 and the low of 197.83. And that's doable. So what we've got here is a point of inflection. So if we draw a zone in above that, we drag that one across to the left, to the right hand side, sorry. We now have inflection point and inflection point. Really, really nice. And now we're creating that margin. I'm just going to increase the shader on those zones, by the way, team. I don't know what's happened. They look a little bit too transparent for my liking. There we go, that'll do. Right, so this is what we're looking at the moment then. So let's go down to the 15-minute time frame. Now we can really see what we've got to work with. This is why we do what we do, because it's a filtering down process. It's got a beautiful risk profile to it as well. I've got a question. Okay, this is a question for everyone. And if you were paying attention to the workshop we did on access points and entries recently, hopefully you will be able to give me a very definitive answer. Looking at this piece of price action in here, And taking into account, obviously, where we're trading from, where we're trading to, what's our goal. We're heading down to 197.80. Let me put in the panel for this as well. So let's say, for example, this is going to be around about the trade idea that we're looking for today in the pound against the yen. What would your preferred method of entry be for this trading opportunity? Shout out some answers. Okay, we've got 8 people in the room. We've got oh yeah, good man, yeah. Don't get caught into the crowd. If you're a BCR, don't be afraid to say it. But if you are genuinely a BOS, then that's good. What's Corton going to go for? Oh God, he's driving. Okay, well don't message them, mate. Don't say anything more. That's fine. That's fine. Right, okay. So a breaker structure, you guys are absolutely right. Yeah, you guys are absolutely right. And a special little shout out to Asif, who is currently putting himself through the ropes with the sessions and getting to grips with what we're trading and stuff like that. You caught it absolutely spot on, mate. So well done there as well. Really, really good. It is indeed a breaker structure. Now, this is an established level. Don't get me wrong. It is an established level, but is it more established than this? That's the question. What carries more weight? The big daily points of commercial interest above, or the little miniature intraday point in between? That's what you have to weigh up. It's the prioritization. Okay, so really, really good work. Breaker structure. So what we're going to do is that's going to be a pending order because we're only waiting for the breaker structure. Stop losses. Look, at a 1 to 2.8, the stop loss is okay. I think I would probably just want to increase that a little bit more to 1 to 2. So let's say, for example, we have that at sort of, a 1 to 2 point, 1 to 2.07. Pound yen spread 0.3 to 0.5. That's going to cover the cost of the spread. That's going to be a nice 0.5, 0.51% return. So that's looking really good. Now, if we think about this as well from a breaker structure for the long point of view, the breaker structure for the long, we're not going to take a long, by the way, but if we were, that would be the breaker structure for it. And so the stop loss is encapsulating both the zone down here, the big one, and the bullish breaker structure point. Not by much, but it is, and it's still getting a 1 to 2.07. So that's looking really good. Now, guys, with the pound yen in particular, I'm going to put this in now. It's quite close to its entry, probably a few pips away, 198.67. Entries at 198.55. It's not a big move for the pound yen at all. So I am going to punch the numbers into that one just now so I don't miss the opportunity myself. And I will send that out to you guys as well. So I'll send you both the pound yen and the USD Swiss there as well. Right, give me 2 seconds. Just going to punch these numbers in. Okay. Okay, that's that. Right. Oh God, hang on a minute. Wait. Sorry, 808, not 888. 808. Okay. All right. Right, so that's the pound yen on the short side. So let's continue. Not too bad at the moment, certainly not. USD Swiss, NZD USD, pound against the yen, and the Aussie NZD. So we haven't got any euro. Let's have a look at the euro dollar. Nice descending level. I think we missed the boat on this one though, honestly. Yeah, I think we missed the boat on that one a little bit. Let's have a look at the Euro CAD. Euro Oz. Got a couple of Oz pairs already, don't we? Both short. We could actually, I'll tell you what, could go for a contrarian view. Yes, I think that's actually quite nice. We don't have any euro. We have 2 Aussie shorts. We need to buy into the Aussie somewhere, don't we? So what better than buying it off against the euro? So that seems pretty good. So what we're going to do here is we're going to line up a potential short. Now the counter trend break of structure for this move is there. Not that one. This one. That's the counter trend break of structure we're going to be aiming for. Now the target profit for this one is going to be at the base before the rally up. So that's going to be about there. It's not down here, which naturally would be usually the next place we go to, but we want to be kind of in and out of the market very quickly on this. Now, that's the BOS, that's the target profit, and that is going to yield a, let's just have a quick look, and that's going to yield a, wow, that's a beauty, 1 to 2.55, not bad at all. So that's going to be a really nice net return on that. A bit of a deeper corrective here. Fine. We are basing this off counter trend breaker structures. We're not just taking a wild short at the top of a bullish candlestick like this. Looking at the size of the move, even though it looks very, very small on the 15, we would be anticipating the daily candle to basically come in on itself. I don't think that's going to be the course of action we see today, but you have to remember why we're putting this in. We are putting this in to hedge ourselves, hedge off some of the risk that we've got in the AC and the Aussie NZD. If these come back on us, we want to be profiting elsewhere in the market so that we can constantly be filling up the tank. So that's a nice idea there to ultimately achieve that end goal. So that's going to be confirmed pending order, 0.25% risk. So that's going to conclude the Forex market for the time being, guys. We now have the AC live, Aussie NZD, Euro Oz, Pound Yen, NZD USD, USD Swiss. Really nice diversified basket in the FX space at the moment. So then we can move on to the metals, energies, and then tie it off with our US indices for this afternoon. So the metal markets at the moment then, gold has actually been bloody awesome. And it's really frustrating because we missed the buyback area by a single candlestick. It was really, really frustrating getting up this morning and having a look at the charts before I hit the road and seeing that gold came down to a low of 33.11. Yeah, nightmare. So it's a bit of a shame. We're currently trading at 33.41. We're right in the median of both of these margins at the moment. The market report call this week for gold short, I personally feel was really good. But yeah, again, just a shame that we missed out on that 33.08 level, just a touch. Now, gold's trading at the median. It's a bit of a hard one to call. You know, definitely could be going long or short from this area. At this stage, you know, I don't really know. We've got this point in here, which is quite a nice area. If we drag it back in time, you can see one. Okay, let me just highlight these. Okay, commercial point of interest, another commercial point of interest, and another commercial point of interest. So we have 3 inflection points within this area, just in recent price history as well. So I think we'll be able to load ourselves up with a short here. Looking at silver from the weekly report, that is not exactly going incredibly well. We did actually taper off a little bit and come down to a low of 37 alongside gold, but it is on its upward trajectory now. It's got quite a bullish run going on here currently. No trading opportunities that I actually want to get stuck in silver at this time though, as gold is the more favorable of the 2 trading assets. So what we're going to be looking at here then is naturally tying it in with our breaker structure. The breaker structure for this one, I would probably say, let's look left again, study previous price action. It will give you the clues you need. So it's not going to be perfect with gold, I must say, with this breaker structure. Not perfect at all. But I think that is as best as we're going to get. It looks really nice at certain points in the history, but then it looks a little bit worse in other points of the history, like here, for example. But I think we've got to weigh this up again. We've got big liquidity above price. We're not looking for the sizable move back down to the previous lows. We are simply looking for a knee-jerk reaction away from big liquidity, back down to a previously used point of inflection before that price gets on. Now, thinking about the fundamentals, of course, don't forget, FOMC minute is tonight at 7 p.m. GMT. This is a big one now, guys. Okay, the FOMC minutes is the front runner event into the Fed Chair Powell speech regarding obviously September, likelihood of rate cuts. Market's 85% priced in at the moment on that. We get any kind of dovish responses from Powell or any kind of dovish headlines from the Fed, or being the FOMC this evening, it's gonna be bad and it's gonna be big. So gold, for example, could rally crazily if there's any kind of dovish stuff out from that. If it's hawkish, then we'll be looking at our trading opportunity being done and dusted in no time at all. But we do have to take that into consideration. So because of that fact, I'm not too concerned about the USD Swiss at the moment. Okay, so don't worry about that one. But for gold, I'm going to reduce my risk based on this evening's FOMC to 0.2 instead of 0.25. And that will hopefully account for any slippage we might incur as a result of that news event. So we're just gonna cut that risk down a little bit. So this is going to be a pending order. We're going to be looking for a target profit here at 33.29. The stop loss for this trading opportunity doesn't need to be anywhere, just a nice little margin above the breaker structure point. That's all we're looking for. Really short term. This is almost like a day trade, almost. And gold could get this done dusted in the space of 45 minutes, even 15 minutes if it really wants to. So that's going to be the gold trade. And remember, 0.2 on the risk front there, not 0.25 on this one. Let me just make that absolutely abundantly clear so there is no subjectiveness at all going on. So download, I'm going to pop that one out to you guys right now. So and tell you what, I did send you, no I didn't. So that's the gold and Euro Oz. There you go. Okay. All right, so moving on then, up to the energy markets. We've got natural gas, which had a crap day again today, to be honest, team. I don't know. I'm not entirely sure about natural gas at the moment. Or energy markets are completely stagnate. They're building, they're awaiting the next fundamental reason to have either their leg up or leg down. They are not a divisive instrument for trading activity right now for our fund. Personally, from a risk perspective, it just doesn't make sense. I do like the fact that natural gas has come down to this point. It is the exact point in which I was expecting it to hit. But I'm just not ready to trade it. I'm just not ready. Not ready yet. I think once I get a breakout above this area, I'll feel a little bit more confident, get a bit more wind in its sails, and then look to take the market back up to around 288. But it's not right now. So we're going to have to, I think we're going to leave the energy markets out for today, and we'll recap on that tomorrow morning with the intention, hopefully, of being able to tie in a natural gas long opportunity. So then it brings us to our US indices. Now we're at 6 minutes past 2, guys. So we are closing in fast to the US Open this afternoon. Now Dow Jones, first of all, let's see where we're trading. I mean, it's margins haven't really changed too much. We've got the nice floor down here. Okay, very, very clearly see that. And we have the ceiling up here. Yes, we did have yesterday's breakout, but this was not the primary point of inflection for price action for the sort of longer term. So we're going to have that one up there. So we've got the high, we've got the low, we know where we're trading. And this is all I'm going to be using today, I think. Let me just check the NAS and the S&P. I tell you, so I mean, ultimately I'm going to have long biases in both of those, so I don't need one in the Dow Jones. That's fine. Yeah, that's absolutely fine. So what we're going to be looking at today with the Dow is we're going to be looking at the rejection from the big top up at 45 and looking for price to come back down to 44.85 down below. Now, once price hits this level at here, we are going to be looking for that breaker structure, and it's not too difficult to find on the Dow Jones. It's right there. So that's going to be your BOS for this afternoon's trading activities. So the price rally up to 45 and then the rejection triggered the trade at 44.956. Stop losses at around maybe 44.99. That's going to be a whopping risk reward yield, guys. That really is. That's going to look super nice. So targeting down at the lows, Stop losses, like I say, 983, something like that. You look, that's going to be a +1 to 3.41. So that could look really nice. Arguably, don't be that greedy. Bring the stop up a little bit, maybe 986.87. Have a 1 to 3 risk reward like that. You're going to be netting a 0.73% return. That is a day well done. You do that 5 days a week, you're going to be doing a lot of money per year. So that USD Dow Jones opportunity is there. Now we're going to move on to the NAS and the S&P. Now, predominantly looking for longs in these ones, and that is simply because of the sizable sell-offs that we had overnight and yesterday as well. The points of inflection, liquidity is below price. It's not sort of crazy size levels of liquidity, but there's certainly, there's certainly liquidity there. Absolutely. We've got this nice sort of dip down, big knee-jerk reaction up here. We've got this really sizable move straight up, and then another knee-jerk reaction from there. We have another one here as well. So this is what you really need to be focusing on when you're doing your studies of liquidity and commercial interest in the markets. Look at the knee-jerk reactions all over the place. The telltale signs are there. There's money in the market at 23,276. So it's a nice place to buy back from. Now, we've already got the short planned out in the Dow Jones. I'm not too concerned about shorting the NAS, and I don't want to short it until at least 23.22 or 23.20, to be honest. So I'm not going to have too much of a short bias in that one today. I think if we can come back down and get another push into 23.28, it's going to really make me feel nice about going long. So let's say that the breaker structure for an opportunity is there. That's on the basis that the market does indeed come down first into money, and then we get the push back up. I would be looking for a target profit at about that level there. So not looking at anything too greedy, just about here. And that would be the move that we're looking for long in the NAS 100 this afternoon. So target, entry, and stop loss, bringing together a 1 to 3 risk reward ratio trade idea. Now, if we go down to the 1 minute time frame, you're going to see that that is a whopping trading margin. Okay, if you're on the 1 minute chart, of course, you do have options, because if the market takes off from where we're currently trading at the moment, you want to have a fallback plan and ultimately look to trade the market between these two levels here. So long, target, and of course your stop loss, and that's still going to yield you a 1 to 2.74. So just have that as a backup plan. It's the little brother. It's the little brother of the big one over here. This is the one that we would ideally like to go for. Get some really nice volatility going in there. Questionable whether it's going to be that way ahead of the FOMC, obviously, this evening. This one probably would be the better one to go for, but the chances of market reaching down here first before the bell goes, it's not slim, but it's a 50-50. It really is sat right in the middle at the moment, whether or not the market wants to come down first or not. So we're going to have that one as backup. And that's going to be the NAS 100. Now, with the S&P, we're going to go up to the 15-minute time frame. Check out that anchor chart. So the S&P 500, a little bit different than the NAS. We actually have a really nice floor down here, which could be utilized for a short. And the long, I mean, that's the point of inflection there. So yeah, I mean, we've actually got some really nice opportunity on both sides of the market on this one. We've got that opportunity there between those 2 points. So we've got long, target, and stop loss for around a 1 to 3. But we've also got the short down here. And that too is going to look really nice. Maybe get a 1 to, I don't know, I don't like things, anything above 1 to 3.2 makes me worried. So I'm probably going to go for around a 1 to 2.92, for example, a 1 to 3. 1 to 3 on the, bang on the dot. So both of those looking really nice, very well rounded, lots of good liquidity in the markets there. The only thing I would say, the notable sort of key takeaway from the S&P, is the fact that the no man's land, okay, which is the space, for those of you who do not know, is the no man's land in here, okay, between these 2 points. The no man's land is quite wide. So there's going to be a lot of trading going on in between here, which means that by the time the market decides what it wants to do, it might be too late. So you might be, just get ready for your Dow Jones and your NAS 100s in there. But if the market drops instantly, then that might be a really nice idea. If the market rallies instantly, then this might be a nice idea. But if it continues to range into the FOMC, then you'll just want to completely ignore these. Now, for those of you who have not done the US Opens with me before, remember that the market order types for the US 30 Dow Jones, for US indice trading is market order. We do not use pending orders or limit orders in the US indice market opens. The spread variations that take place upon the opens can vary widely, and usually do, and the fluctuations between them are very, very significant. So there's quite a big disparity. You don't want to be using any kind of pre-contextual market order types at all. So it's always finger on the trigger, getting ready to go. Don't lose sight of the plan. Okay, the trading plan is there for a reason. Remember, to take the trade is 1% of the job. To plan for the trade is 99%. Okay, it's all about the planning and the preparation. Okay, this is the way we work. This is the way I work. This is the way all of my traders work. This is how we make money every single week. Hopefully, maybe not. Actually, that's a bit of a lie. I don't make money every single week, but I'm pretty damn close to making money every single week, and that's exactly how you do it. All right, so be careful out there. We're not risking any more on any trade other than 0.25% per trade. Gold is 0.2% because of the fundamentals at play. This one's rallying so much at the moment, not even damn sure that things are going to come back down. But just be aware of that. And when FOMC takes place this evening, let's say half an hour before the FOMC, make certain that you are clear of all US indices. Now, ideally, we want to be in and out of the US indice markets within the space of a couple of hours. The trading opportunities that we have today are more intraday style. That's not done by mistake. That is actually done slightly on purpose, consciously, let's say. But make sure that you are out of all US indices by, let's say, 6:30 p.m. GMT. So 30 minutes, or whatever time zone you're at, 30 minutes before the FOMC event. And then don't look to re-engage until the event takes place, or watch the event and then call it a day. Okay? So I can't remember if I took a picture of the S&P, so I'm just going to remove that, take a picture of that one as well. Are there any questions, ladies and gents? Any questions at all from anyone? It's been a bit of an action-packed session, if I don't say so myself, today. We've built up a really nice diversified book. Just to recap, we have opportunities split side in US 30 Dow, NAS 100 and the S&P. We have a short in gold. We have Aussie CAD running live at the moment. That's really for the members behind the scenes. We have the Aussie NZD, the Euro Oz, the pound against the yen, the NZD USD, and the USD Swiss. So we've got an incredible amount going on here. And I think we're going to be in a good place, hopefully, to see some potential returns. Or it's going to be a very sore day tomorrow, one or the other. No questions for you, Braden? No problem at all, my friend. Anyone else? Any other questions? Asif, you're all good? Yeah, good man. All good, hoping for some good moves. Yeah, let's keep our fingers crossed. It's not been great. The markets have not been great recently, but these things happen. You know, we go through the peaks and troughs. We've been through it for years. Some of us, you know. We understand what it's like. Exactly, it has been a tough week, but it's come off the back of some really good weeks. You know, to be honest, it's not just this week that's been tough. Last week was not very good. In fact, I think the week before that was quite slow. It was a 1 to 1.13. Last week was 1 to 1.59. And this week we're at 0.17. So things have slowed right down. But we cannot discount the fact that the 3 weeks prior to that, we were looking at 6 to 8% per week. So it really is swings and roundabouts. Yeah, exactly. It's holiday season. You know, look at the trading room. Half of the members are all on holiday at the moment. You're going on holiday in a few weeks. I'm on holiday now for a week and a half. So, you know, it is the time of year where people go away, and you see a big cyclical reduction in liquidity in the markets, which is why you get a lot of slowdown. But we are lining ourselves up for a crazy winter season, so looking forward to that one. But let's not wish away the rest of the summer just yet. So I'm going to wrap things up there, ladies and gents. We are currently at 18 minutes past 2 GMT, which means you all have about 12 minutes to go, until the US bell rings this afternoon. Hope you've enjoyed the session this afternoon. If you have any questions or anything at all that you would like to know more about, please feel free to fire a message out into the chat and I will get back to you ASAP. And I look forward very much to catching you at 9:15 a.m. in the morning to see where we're at. So take care, team. Have a great afternoon, and I look forward to catching up with you then. Thanks a lot. Bye-bye.